Welcome back to the show. Let's talk to Ben Kumar. He's from Seven Investment Management. Ben, welcome to the show. Right, we were talking off air. What's ticking your boxes at the moment? What's not ticking your boxes? And we were talking about asset allocation, and you basically re-emphasising the fact there's no tech in Europe.
Yeah, exactly. So lots of people saying, isn't it worrying that in the US, most of the market rise over the past year has been driven by the tech companies, in particular the big ones, right? 40% of the S&P's rise this year is down to your Facebooks, your Amazons, your Googles, Microsofts. And so you go, right, well, I don't want to invest in them, but I still feel pretty bullish about the world. So where do you want to go? Well, you look at Europe, and there's no big tech companies there. You've got your banks, you've got your utilities, you've got some of your industrial companies. So if economic growth keeps going, lots of room for growth in Europe, but no exposure to those let's not say overvalued tech companies, but we just don't know how they should be valued in today's day and age.
But we're massively long of fintech in London. Okay, how close are some of these companies to listing? Or in this day and age, are they saying we don't actually need to list because we've got crowdfunding, we've got private equity, etc., etc.?
I think that's exactly the point. At the moment, if you're a small tech company, there's so many people queuing up to give you money in the private market where, your restrictions are far fewer. You don't have to have so much declaration. You can, even, let's say, sell a lie to your investors for some time if you're looking to do a runner with the cash. The idea of staying private for longer is appealing to people. Look at Uber. Yep. Right? Uber's would be one of the biggest companies in the public markets, and yet it's still private. Yep. So I think that's the problem. That public capital you just don't need anymore.
In terms of sectors and sector allocation, we're going into Q4, we've got earnings season. Is there any sectors you particularly like or dislike at the moment?
I still think that banks are somewhere that the world just hasn't got to grips with yet. And we've been saying this for years, and it's gradually coming true. You see the earnings results from US banks today and yesterday, and they've been pretty positive. In Europe, it's even more the case. Deutsche Bank started 2016, everyone said it was going bust. Yet here we are, earnings are up a little bit, it's restructured a bit. Financial system still operates due to the banks. And if you think the financial system's still going to keep operating, you probably want to invest there.
Okay, so in terms of fund managers, you've got the political situation, you've got the geopolitical situation. How do you actually discount this into your day-to-day job?
It's really difficult to work out when you should be, taking risk off the table. It's always going to be impossible to time the market exactly, right? But if an announcement comes out about North Korea, do you go to cash or do you stay invested in the market? The one time you don't do it, you'll probably be wrong. Yeah. So just if you think that risks are a little bit higher out there and valuations are expensive, just have a little less money on the table. I think that's our approach. And it's if you think growth's solid but valuations are high, a little bit less cash in the market and a bit more on the sidelines, waiting to invest.
Well, I was always, when I was sort of trading, broking, running money, I was always told, always make sure you can sleep at night. So if you can't sleep at night, your position's too big, make sure your position is such you have a good night's sleep. But I think that you're at all-time highs, okay? It's very difficult to say to yourself, I'm now going to go into the market because this has been, quite frankly, the most hated bull market in history.
Yeah, and that seems to be continuing, right? Everyone is saying, I've got cash ready, waiting for a pullback. And lots of other market commentary from the investment banking side in particular is saying, because everyone's saying this, there's no pullback to come. You see a 1% fall in the S&P 500, and it's up again the next day. Yeah. We haven't seen a move of more than 1% in the S&P more than 8 times this year. That's mad. You've never seen that before.
Well, the VIX at record lows, given everything that's going on in the world, okay, is this now not working as a risk factor?
Well, someone posted a really interesting article this morning saying that what's happened is that people have got wise, and not just investors, but people who would never usually invest have started saying, well, hang on, the market seems to be delivering a return on capital. Whether you want to kind of put it in terms of inequality, people saying, well, hang on, all the people with assets seem to have loads more money than they used to. Maybe I should own some assets. Yep. People are there just continually dripping money in. And I think part of it goes back to what you've been saying earlier. It's about passive vehicles. Investors don't have to make a choice anymore. You don't have to do any legwork. You don't have to go, okay, do I like Lloyd's? And do I tell my broker to buy Lloyd's? Or how? You just sit there and you go, I'll buy the FTSE 100 tracker and it'll cost me almost nothing. Yep. It's really, really easy now to buy the market.
I think it's sort of FTSE 250 tracker being offered at 0.17%.
Well, do better than that. State Street over in the US have bought out a US market tracker for 0.03%. That is, as close to giving it away as
It's
possible.
extraordinary.
And if you give that ability to everyone who can, open an online account, which is now easier than it's ever been,
Yep.
it means people stay invested. They set up automated savings plans. You know what people are like. They stick to their habits. Once it's done, you forget about it. Your money goes out of your account into the stock market relentlessly. Tick, tick, tick. And that's, I think, part of the reason everything's going higher.
Thought-provoking. That's why it's going higher. We shall see. Ben, as always, thank you very much indeed.